The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. Boys and girls, we've got a couple of things really happening interesting today. The greatest marketing company in the world, Apple, they get more free advertising than anybody I've ever seen, with maybe the exception of Hugh Hefner back in the early days. Folks, take a look at this long-term chart in Apple. This goes back over 20 years. This comes from our good friend Jim Bartolioni from V50 Partners. But if you'll notice here, you'll notice we have this three-drive pattern, three little red arrows there. The 1.618 expansion on Apple measures to 175, and we've hit 175.80 this morning. So keep an eye on that. That's going to be a real interesting one to look at, historically anyway, if nothing else. All right, like we usually do, we changed protocol just a tiny bit today. We usually start with the German DAX index. We're going to show the weekly chart because we've been waiting for this price to be hit, which is right up at that 127 level at 13,490. And we hit 13,477 so far today, but it's still a little early. The jobs number came out. Unemployment is approaching zero, I guess. And interest rates are going to go to zero also. Folks, interest rates are going higher. They don't know it yet, but they are. That's a very bearish market. We've been saying that for quite some time, and that's what we really want to make a point here. Now, we do have our friend and a very special guest, Norm Winsky from Astro-Trend out of Florida, coming on at 9:30. He's done some really great stuff for us here at TFNN, and we're anxious to hear what he has to tell us. Okay, I wanted to share with you something about trading that someone asked me about, and I thought I might as well do it here. This is a chart. The one we're going to look at right here is a chart of the euro. It's a 30-minute chart going over the last 6 or 7 days. You see the big break that we had down from the 1850 level, which was a perfect 78% retracement from the low. And now we've been in this really tight range here, for quite some time. And if you look at this, gee, there doesn't look like to be too much there. However, if you take it one step farther and do the work like H.M. Gartley did on page 249 in his book, Profits in the Stock Market, you'll see that if you just add the parallel channels to this, you'll see that it's been following a very distinct parallel channel that has been just about perfect for the last 6 or 7 days. And you noticed it had the ABCD pattern there in red. That's a perfect ABCD Thunderbolt pattern, whatever you want to call it. And that says that we should be, have resistance at the top of the line and support at the bottom of the line. That's basically what it's saying. If it comes out of either one of those, then you've got something to talk about. Until that happens, it's in this small trend over the last 6 days. That's why when someone asks you what the trend is, you must ask what time frame are you talking about? Because if you're talking about longer term, it's certainly down, isn't it? But over the last 5 or 6 days, the trend has been up. So that's what you have to do, is you have to quantify that. Now, the jobs number came out, and we all know that always brings havoc to the currency markets. Let's just check to see what happened with the euro this morning when the jobs number came out. We'll just pull this up here. And you'll notice here that we went right up to the other, we took out the previous day's high by 1 tick, and now we've already broken down. We're down around 116.45 right now. So we're heading towards the lower end of that triangle. And longer term, we are looking for at least below 115 in the euro on a longer term basis. We're talking about the wheat here in the market. We will take a look at wheat. That's had a very nice move, folks. We'll put this up. This is what we were watching on Monday. We had to sit through about $150 worth of heat on the wheat, but now it's really starting. It got down to 416, and now we're trading. Last time I checked, it was around 428, but I haven't checked it early this morning. If we get about 15% in that, or 15 cents, I would book that. But right now, you want to put your stop at break even, so you wouldn't have to, worry too much about that. That's for sure. We don't want to have you keep your losses small. You can stay alive in this game, a very, very long time. We've had a request to take a look at the euro on a little bit longer time frame this morning, folks. We're going to look at it here on a weekly basis. We do this each week, but you'll notice that when we made that top up at the 121 level, one second, we had three major ratios hitting at that time. We had two 1.27 ratios and a 1.618 ratio. So that told us that we were most probably pulling down, and you can see right around that 114 level is our ultimate price objective on this move that we have coming down. You'll notice the two red boxes there in early February and also in April. Those moves were exactly perfect. In other words, each of those corrections was absolutely perfect, which gives you another idea of why pattern recognition works, is because what happens in the past happens in the future. So in order to see what the future is going to be, you've got to go back into the past to give you an idea of what's happening here. So we'll keep an eye on that, and we'll see what's going on with that. Yes, the Russell is the weaker of the four indices, but it's still a little bit early in the day, and this is a Friday in an up week. This is also the last day, the last positive, statistically positive day. The last 2 days of the month and the first two trading days of the month are usually positive. So we are past that right now. So now the bias is to the bearish side, at least for the next 12 trading days. But that's short term, and that's just a probability. And remember, probabilities are not certainties, no question about it. Now, we had a question about the hog market. Why, I don't know, but we'll put it up here anyway. This is what we were looking at in hogs. I think it was just 2 days ago. We don't trade this. Well, we don't trade it at all. But this is the pattern. You can see that's a 1, 2, 3, 4, 5 expanding triangle. Again, you can see the two expanding ratios of 1.27 and also the 1.618 ratio. And you have a beautiful ABCD pattern coming in there, which makes that a butterfly pattern. So let's just check and see what happened here with the little hoggies. Since that time. I hope we can get it up here. Can we do that? Yeah, here we go. Yeah, they've had a pretty good down move here these last couple of days. And we'll put this up here to take a look at it. If you have any questions, folks, you can call in at 877-924. Wow. 877-927-6648. Copy that. Sorry about that. It's a little early in the morning out here in the old Pueblo. And hold on just a second here. We will be going to the bonds next, I believe. Just 1 second, boys and girls. Yes, here we are. Let's get up here and we will see the bond chart. I'm going to take a break here, but we're going to cover these bonds when we get back. There we go. We'll take a little break, and then we will cover the Treasury bonds when we come back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and someone's asked me what I think is going to happen to gold, and all I can tell you is, I look at 4-hour charts a lot, and all these rallies have just been, just 10, 11 bucks and then down again. And if we look at those things, oh, it's my daughter calling. Anyway, she'll have to wait. Anyway, let's, they had a little too much good time over in Los Angeles, I think, but we'll see what happens here. Okay, the next thing I wanted to talk about here is, oh, shucks, what did I do wrong here? Oh, shucks. All right, I'll get that taken care of. Anyway, if you'll look at this chart here, I hope I posted it. Let me double check. Yes, I did. This is the ABCD structure coming down to 1250. We're trading around 75 right now. We had a little bit of a bounce that was the 61% retracement off of yesterday's high. Stopped right there at 1279. So that's pretty much what I'm looking at as far as a move to the upside. I just don't think it's ready to turn. Silver's holding up a little better. Platinum is holding up okay, but we'll review that over the weekend and put that in the newsletter so that we can see what we're watching. But it still looks like we want to get down to that 1250 level. And remember, our good friend Stan Harley thinks that we're looking at still looking at the level of 890 in the gold. That's 400 large, folks. That's a big move if that breaks, and there'll be plenty of chances to take advantage of it if it in fact does that. So we'll watch that with a little bit of interest anyway. Now, I did want to talk about Apple for just a second here, folks. I wanted to give you a little heads up. I watch this stock because it's a really great trading stock, but if you'll take a look at it here, you'll notice those little red boxes there. Those are the opening prices. And if you notice, each time that it opens right near the high of the day or the low of the day, it has a tendency to reverse. And today you're going to open around the 175 level, and it's trading at 175.55 the last time I checked. And the 1.618 expansion on this over the past 2 months comes in at 175. And, you're talking about really close. So I don't know where Apple's trading right now, but this is one that you'd want to watch. The way you'd handle that is you'd wait for the first hour of trading, and if you're below the opening price, you sell it. And if you're, you got the odds in your favor, you got your odds 4-1 in your favor. And if you remember the work that we heard with John Jameson about how things work in probabilities, those are the kind that you really you try to look for as the best possible entries of what we're trying to see. So let's just wait and see how Apple works. We'll check it next week and see if we're right or wrong. It's trading at 174.19 now. That's a little below that, so that's a good idea. Folks, the Treasury bonds, I think Treasury bonds are going lower. They missed my sell point this morning by a hair's breadth. I was trying to do it at the 154.05 level. We didn't get there. We only got to 154. And then it sold off a little bit, but that's what I'm watching here. So we'll see what's going on with some of these things. Okay, well, we don't open for 9 more minutes in Apple, so you got to get that first quote at 9:30 Eastern Time and then see what it does from that time frame. And then you've got something that you can use as a, potential for something, really interesting. I wanted to just bring this up here in gold for just a second because we did have this, this is before Fed time, and time to jump in. I don't know, is TBT, I don't like those ETFs. That TLT and TBT, folks, that, they don't mimic the bonds and notes like they should. I don't trust those ETFs. But remember, I was the yes, Norm uses Apogee and Perigee. Why don't we ask him when he comes on, Marshall? He'll be on in a few minutes here, and we'll certainly ask him. I know he does because he follows the lunar cycles, very, very closely. That's why if you notice, we almost always have a Norm on twice a month, a new moon and a full moon. So that's why he's on now, is we got a full moon. And here in the desert, boy, the moon is just like daylight. We got 24 hours of daylight here in Tucson because the moon is so bright and it just lights everything up. You could drive without headlights if you stayed up past 8 o'clock. Let's take a look here at the gold market. You'll notice this was right before Fed time and right after the Fed time. It wasn't Fed time, it was the jobs report. It rallied right up to a 61% retracement of yesterday's high at 1285. The high was 1281, and now we're coming down. And you'll notice that we have some support coming down there again at the 1268 level. So that's all it's been doing. It's had some nice swings. And Duffy, I have lived here 24 years, and the only scorpions I've ever seen have been in pictures. I've never seen it. And they tell me that there are scorpions all over the house, and you see them at night with flashlights. I've never seen a scorpion. I've seen a couple of rattlesnakes, but never a scorpion. And but anyway, that's neither here nor there. Okay, anyway, that's my feeling on the bonds. We are going to see higher interest rates. I don't think it makes any difference who is going to be on the Federal Reserve, but we'll have to do one thing at a time and let them decide. Right now, we had the gold rally up to, that's what it got to 1281, which was 61. We're trading around 1278. There's support about $8 lower at the 1260. 1269, 1270 level, so keep an eye on that. But longer term, I still think we're heading lower in the gold, and one of my reasons for that is the fact that the euro and the gold have a very high correlation right now, and that's telling us that it wants to go a tad lower. So just watch that very closely. Now, the number one question some people seem to be asking this morning is crude oil. Folks, we went up there and we tagged that $55 level twice now. Let's just get it up here. Oh, please don't. There it is. I almost lost it. There we go. Give me 1 second and we'll get this up here and we'll take a look at this. We've been up here Thursday and Friday. We hit the 55 level. We took out the high of the year by 3 cents, folks, 0.3. That's $30 in a $55,000 contract. There was not much buying up there. My assumption is we're getting ready to turn over in crude oil. The only thing that would change my mind is that if we close strongly above $55 a barrel, then I would remain bullish into next week. But if we don't do that, I think you have to prepare yourself for a bearishness coming into next week, because you took out the yearly highs and didn't go anywhere. That's like a double top, but it's also, right at the major retracement number. Those are the kind of things that you live and die for if you like pattern recognition. So let's keep an eye on that. It's going to might be an interesting one from the short side. Remember, we already cleared the high in the heating oil, and it also did not go very far. So there's some indications here that we might be getting ready to roll over in the crude oil complex. That's just mainly what we really want to be looking at. So in about 4 minutes, we're going to have our good friend Norm Winsky from Astro Trend on. He's always got some great stuff. And we'll ask him about apogee and perigee, and we'll see how that all works out. I'll try to get a natural gas chart up for you, Duffy, during the break. So we'll be right back with Norm Winsky.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Norm Winsky, Astro Trend, are you with us?
Yes, sir. I'm your moon man, Larry.
Tell me, apogee, perigee, we got questions. What do you know about it?
The 25 days on the perigee cycle, and it gets together with the full moon and new moon about every 14 months. I think it's average 423 days.
Well, that's pretty good.
We're moving toward those phasing together in about a month. They're going to get together, be close, in order to have what we call the astronomers call that when they get together. It's called a syzygy, SYZYGY. There's a great Scrabble word for you. And in pop culture, it's they call it a supermoon.
Now, Norm, when you look at these things, when you have an apogee and you have the moon on the right on the equator, and the other things that are there, that means extra power, doesn't it? When they all
each thing cranks up one notch on the lunar power there. We're moving toward full moon at perigee. Didn't quite make it this month, but you're out there in the desert. The moon's going to look extra bright, extra close, and then at the end of the month, I include December 1 as the end of November, and that's over that weekend, December 1 weekend. We're going to have the full moon at perigee.
Okay. Norm, do you want to go ahead and start the show? You've got control of everything, so if a question comes in, I'll interrupt you. But right now, let's get started.
Great. Okay, so I thought since I was on here on your show on October 18th and I gave some dates and so forth, we go over those real quick, see if I helped anybody make any money. So back on the now just a little bit on my lingo here. I give you dates, and then I also give you what portion of the day it occurs, so it doesn't happen in the morning, afternoon, or what I call over after the close, which is kind of overnight. If we have something that happens at 10 o'clock at night, it might affect the close of that day or the next day's opening. So we have the 18th, which is after close. I talked about Jupiter is entering the sign of Scorpio. It changed Jupiter. It takes 11 and a half years to go around, and so it changes. There's 12 signs, and so it takes about just a little under 1 year for Jupiter to stays in one sign for about 1 year, and then it changes signs. So we had the big sign change for Jupiter back on the for geocentric from the point of view of the Earth back on October the 18th after the close. So that could affect what happens on the 19th. I gave you these dates. We don't have time to go over all these markets, so I took a sampling here. For example, T-bonds. You can see, hopefully everybody can see the chart I have up on my screen here. And you can see here's the 18th, the line for the 18th right there. And on the next day, we made a nice little top right on the top of that, right on the channel line there for T-bonds. And we also
Norm, we have a question from one of our listeners. Where do these signs of the zodiac come from? The 12 signs.
That's thousands of years old.
Well, we were there then. Don't you remember?
Well, I was talking to Ptolemy one day there, and right.
So this is going.
I don't know. It's absolutely ingenious what the ancients came up with, but we really don't have time to go into that. If that's okay,
Sure. No, go ahead. Keep going. Yeah.
When they call,
they're interested. They want to make money, so go ahead.
When they get the free class, they can ask those kind of questions.
Okay.
Yes, sir. So anyway, we're going to move on now. I mentioned cocoa as part of this category, and you can see here that also worked well. Cocoa was near the. Here's your 18th line right there, and you're within a day of the high of the month. That's where you want to be selling it. It's at the high of the month, I think.
That's right. Sell high, buy low.
By the way, these green and red arrows I have here, those relate. I took this right out of my November letter with the results for October, and the green arrows are the winners. Where you had a chance to make some money. The red arrows are the the ones that are not so good. And so you can see here on the, I think about at 75% on the bonds. I did 100% on the cocoa. You have these green arrows near the bottom here and there, and then up at the top we have the near the high. So that's pretty good. Anyway, that worked out well for the cocoa. Hogs also did very well, although it didn't like that date. That's the only date I missed on hogs last month. So just showing you that I'm doing this for real. I'm not making this stuff up. I show you the good, the bad, and the ugly.
You're consistently 3 out of 4. You can't beat that.
There you go.
Well, you can, but not many people do. So go ahead, Norm.
So here's the S&P cash, and there's your line for the 18th. And I think the next day, remember when we had that big gap down on I think it was on the 19th, Larry.
Yes.
Yeah,
Yep.
I think Dow was down 150 points on the openings, and the S&P was down proportionately and so forth. That was that day there. I had that as a change in trend time with the moon, and Mercury was doing its thing there. Mercury at 0 south latitude, and so that also implies you should be looking at the grain. So let's go look at beans. It's considered in the grain complex, although, as you know, Larry, beans are not technically a grain. They're a legume.
Oilseed. They are oilseed. That's right.
They're related to the peanut, actually. They're like a cousin to the peanut. Anyway, there we go. We had a nice little, the nice little top right there on that green arrow. So anyway, these dates are working well. And let's see. Then the next thing we were looking at after the close of the 19th, we had the new moon in Libra. And then right the next day, with that weekend, we had Mars going into Libra, which is directly associated with sugar and wheat. Let's see how that worked. And this is one of the first things I ever developed when I started doing this was watching Mars go through the various signs. Mars takes about 2 years to go around, and it stays in a sign on average about 5 weeks, which seemed to me like a nice swing pattern, potential for a nice swing. You go in there if a market gets to an extreme. Mars goes into that sign and it turns around and starts running. You might, coinciding with the moon, you might get a nice move for anywhere from 2 to 5 weeks. That seemed like a nice swing period to me. So I started tracking that, and I found that some also helped me discover what signs go with what market. So anyway, I have sugar and wheat. You can see there, right there. Here's my little note down here. 10:23. That was a Monday. 10:20 after the close of the weekend. And that was a very good low. Missed the low of the month by only 1 cent. Now, I don't mean the big penny. I mean the little penny, So was that $11.25 of sugar or something like that, right?
Well, that's absolutely spot on. We got a question. We'll take the question after break. Keep going.
All right, and the wheat was even better. Got the exact low when Mars went into Libra right there on the Monday the 23rd. Okay. All right, moving on ahead here. Now, looking ahead, I was going to talk about the full moon. And we got the full moon in Taurus. Usually the moon isn't that big of a deal for your meats. But in this case, because the full moon is in Taurus, the bull, you might figure out we might want to look at cattle. And so there we go. So I know you've been a little tracking the cattle here the last few days. And on all these markets, what you want to look for is the market gets to an extreme at one of these key moments. And so
we're going to take a break, Norm. We'll be right back with you, okay?
Yes, sir.
We have a question for you when you come back. Norm Winski, Astro Trend.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we have Norm Winsky from Astro Trend. And Norm, we have a question from one of our listeners, and you give us so much information. How do you keep track of it? I mean, you've got, you're following probably 15 or 20 things. You've got all these dates and prices come up. Do you use a worksheet, or how do you handle that?
I have a big calendar. As you know, Larry, I have a big calendar in every letter, and it has all this mapped out. And I in the class, I teach you where you can read. You'll be able to read this stuff and pick off the top days of the month in a matter of seconds.
Well, that's pretty good.
It's all very. The secret to my whatever success I have is you have to be very organized and very methodical in approaching this stuff, or you'll be lost.
Mm-hmm.
You have no choice. You have to be very organized to do this. So because there's so, like I said, there's so much data to look at, So if you get it organized in a way, I can turn you into a supercomputer with my activity calendar, where you just glance at the thing, where all the big action is for the month,
Well, math is one of my favorite subjects. I learned it in the 5 years I was in the 5th grade. So anyway, let's keep going, my friend.
That's another thing. You need very little math to do this. I organize in such a way, but you don't need to be smarter than a 5th grader to do this. No. So anyway, let's talk about the moon for just a moment. That was on my notes here. So we have the full moon this weekend. You'll want to go out. Don't remember to put on your moon glasses Friday night.
Yeah, well, you need them. You need them last night.
Well, it's getting close. So, like I said, we're 1 month away from, the full moon cycle is 29.5 days. Apogee, perigee is 25 days. So it gradually phases in and phases out. And as you get the full moon at perigee, then it looks like an extra big moon because it's closer, So it's going to be probably extra bright, extra close, as we get closer to this full moon. And then the next full moon's going to be the big one also, Larry. I was planning hopefully you'll have me back on in the middle of the month so I can talk about at the end of the month when that's going to be huge, because we're going to have the full moon at perigee. And hold on, Larry, fasten your seatbelt. And Mercury's turning retrograde all at the same time.
Well, that brings us back to where we were almost in May 19th of 2015 when you called the top within 15 minutes. Everybody remembers that, Norm.
This will be a cousin of that one, right? So there you go. All right, so there we go. So we got the candle, the full moon in Taurus, and so we want to see the market get to an extreme at this time. If it doesn't, you probably don't want to trade it. If it does get to some sort of extreme at the top of the channel or the bottom of the channel, that's good. I think in this case, since the candle has been going up, stampeding to higher prices, I think the more ideal scenario would be if it were to rally back up and test the highs, and then I think you'd have even probably greater probability of making some money. The only market I haven't, that we usually cover, that I haven't talked about so far, is the dollar. We got some, the U.S. is the natal chart. That's when the country began. We take a picture of where the planets were back then in 1776, and believe it or not, this works very well. And I have a very good batting average for the U.S. financials, stocks, T-bonds, U.S. dollar, based on, in part on that. So here's your U.S. dollar. we got this weekend is a change in trend window for those markets. So there's your U.S. dollar. If we can rally back to test the highs into the weekend here, that would be a high probability trade. Or if we go back down to the bottom of the channel, but we're kind of, as of last night when I did these charts, we're kind of stuck in the middle,
Mm-hmm.
So we need a little volatility here today to get some moves going here, so that you can take advantage of these timing windows. Coming up here, we have some more stuff happening. The 9th, the 10th, right around there is another window. We got something big coming up here after the close of the 10th overnight, between the 10th and 11th. Saturn is going to be that 120. That's 1/3 of the cycle to Uranus. That's a 47-year 1/3 harmonic of the 47-year Saturn Uranus cycle. If you go back, you know your market history. I know, Larry, and you might remember back in 42, that Saturn was conjunct. They were in the same degree, and that was a major low there. I think in early May of 42, that Saturn and Uranus were conjunct that week. That began the big bull market,
Mm-hmm.
So anyway, we had the 120, the 1/3 harmonic here. That's going to be, in particular, you want to watch your copper around then and coffee. Okay. So looking ahead here now, here's your stock market. We have some specific to the stock market. I do some Gann math where we do some key dates, and if we take the bull market from August 9th, 82 to the top on the S&P, March of 2000, that's 6,437 days. We multiply that time by 2, you get 12,874 days. If you add that to August the 9th, 1982, we get, guess what? The 7th of November, next Tuesday. So that's a window to watch. And then we have I do a astro analysis on key dates, major turning points in the past for the Dow Jones, and that popped up on the radar. So we had the 30th. That was a top. You can see here on the chart. Here's your top here back on Monday. There's Monday. You had a little top there, and we had a big, nice down day on topped out on the opening there on Monday. And then we had the 6th coming up. That's Monday. And then on our Fibonacci time cycles, we have that's coming up. The 3rd. The 3rd. Yeah, that's today. So the Friday, Monday is a time window for a change. Our Astro analysis also says the same thing, and that's for the Monday the 6th. So we're due for a change in trend in the stock market here, coming up into the weekend. Here's your T-bonds. Here's your dates for the T-bonds. Had the 30th. That was a nice October 30th there. Where's the 30th? There we go. That was just like a day off of that bottom there on the 27th. And then we have the 6th. That's Monday coming up. That confirms, the bonds kind of been trading opposite the stock market. So that tells you that's lining up with the stock market for Monday for a change in trend. Here's any questions before I move on to the next phase?
No, we're good. We have one question, but I could ask. This person's asking, and I don't think it's a fair question, but if you had to pick one trade for the next week, what would you look for, Norm?
That you got to wait till you get there, and then you look at the market and see what markets are at an extreme, and then you want that market to stop. If it's like a speeding train, you want the train to slow down and pull into the station at the magic time. You don't want to jump in front of a speeding train. It's not good.
No, definitely.
Yeah. So if you're coming up to, you got a chance here. I rolled back the chart here. Here's your stock market. You get to the top of the channel, like you were showing earlier on with the Gartley thing. He was a channeler. I'm a channeler. And so if you get to the top of up to your resistance, top of the channel, bottom of the channel, then you have a point to sell against or buy against. And you can use that also. And you have time. You have a time stop. And you have a price stop in that, this has to work within one trading day or you get out, So, and you have your price there. If it exceeds the channel by any reasonable amount, you want to stop that too. So stop your losses, right?
Yep.
All right. Just thought you might want to have them put this up for a while, for several months, many months. So see how it's going this month. Here's all my batting average on these signals I have for the markets that I write about and I feature. I do even more markets than this, but I don't write about them. They're on my big calendar table, so you can see how things have been going. For October, and you can see here that I did 77% for October, here's the numbers for the entire year, and averaging 72% for the year. And there we go. So and
we'll take a break and then we'll come back with us, okay? We got to pay a few bills.
Yes, sir.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, with Norm Winsky of AstroTrend. And Norm, I know you have a terrific offer for the folks, a double your money back guarantee for your free service where you teach these folks. Go ahead and tell us what you got.
Only, though, if they mention your name, Larry. All right?
Oh, then it's triple your money back. Go ahead,
Right.
Norm.
Anyway, so October 31 was my 39th anniversary of writing this down and sharing it with people. And so I just thought I'd mention that. And it's I never met, this has been a monthly thing. I map everything out a month in advance, and I've never missed a deadline in 39 years. And I had a couple quite a few close calls, but somehow been very lucky. I had a hurricane a month ago, and the hurricane landed in the middle of the month, so I was able to recover and get back in the saddle in time, you know.
Mm-hmm.
Anyway, so I got the you can get the free class and the free letter if you just contact me and you qualify. And you know, obviously, you need to have a little bit of trading experience, not much, and you don't need to be smarter than a fifth grader. I had a guy take my class a few weeks back, and in October, on a Saturday, and I said, okay, well, let's follow up and see if you have any questions in a couple of days on maybe a talk on Tuesday. He said, okay. I said, how's it going? He said, well, I'm almost there. I said, what do you mean? He said, oh, I set a goal to make enough money to cover you for a whole year, for my trading from your letter. And I'm almost there. And so the next day he sent me the money. Yeah, he made it all in about 2 to 3 days. And so I was amazed because I'm a very cautious person. So I went and jumped in there, and you take that new system that you've never seen before, and you start risking serious money. That guy
Amen
did
to
it,
that.
and he had it all covered within 2 days. Anyway, so all you have to do is contact me. Here's my phone number. I'm in sunny Florida here in Naples at 239-594-3939. Here's my email. Nwinsky at embarkmail.com, EMBARQMAIL.com, or you can call me on Skype at norm.winski, NORM.WINSKI. And looking forward to helping some of your folks, Larry. Call me right away because I have a very small window every month, and I just have a couple more days. We'll do this. We might be able to help you early next week if you call me right away.
All right, we'll see you in a few weeks. Thanks for joining us, Norm.
You bet. Thanks a lot, Larry.
Okay, bye-bye.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.